Hi, I'm Greg Hunter. Welcome to USA Watchdog. With us once again, a money manager, a guy that manages about $8 billion, big fan of silver, also gold, also mining. We have with us Eric Sprott of Sprott Asset Management, the top guy there. Eric Sprott, thank you for joining us today on USA Watchdog.
Greg, always a pleasure to talk with you.
Well, I know you're bullish on precious metals, and you're bullish for a pretty simple reason. The debt keeps expanding. And I know that there's a pretty good suppression game. This recent budget that they did is basically a stalemate. I mean, we're just going to have more of the same. And the other big shoe that's going to drop is, oh, yeah, we need another couple of $1 trillion added to the debt ceiling. What do you think about the latest budget deal?
Well, as most intelligent commentators have suggested, it's just kicking the can down the road, right? We need to come up with something. It was so minimalist, it was a joke. And, of course, as you and most of your followers would know, the bigger problems haven't even been dealt with. And I refer back to your wonderful interview with Lawrence Kotlikoff and all of the entitlements that have never been accounted for. And much as we might want to say the deficit's $700 billion, as Professor Kotlikoff, as the Treasury announced, the gap deficit was in excess of $5 trillion. But of course, it never makes the mainstream media, and it's the elephant in the room, and it just gets bigger every year. So, the fact that they might have saved 20 billion or 50 billion, like, who cares? I mean, the numbers are gigantic that they haven't provided for in entitlements.
Well, the 700 billion is kind of accounting gimmicks, according to John Williams. It's we're going on the hook for, every year isn't, not this year, they say 700 trillion, but it's more in the neighborhood of 4 to 5 trillion is what we're really going on the hook for. And Obamacare is a monstrous entitlement program where all these young people are supposed to be signing up. They're not. 45 states are way below. I mean, about maybe 10% of what they projected to have in terms of signups for Obama. This is a huge entitlement. And to your point, the debt is going up. Kotlikoff says it's what we really owe right now, what we're on the hook for, what we owe is in excess of $200 trillion.
Yeah, $220 trillion. And, Greg, to go back to the Obamacare, I mean, here we are coming up to January 1st, when a lot of people are supposed to sign up and are receiving all their notices of what their new payments are and what their deductibles are. And I'm thinking, healthcare is already a huge part of everyone's budget. And when you start reading that somebody's healthcare costs go like 50s and hundreds of percents, I mean, it's dramatically impacts the discretionary spending of people. Just as, for example, even this year when we had the 2% increase in Social Security, when they reported the first quarter, discretionary personal income went down by 8% because most people's income is already spoken for. So I think that the Obamacare, I'm going to be fascinated to see what happens in January to the average person who has to sign up for this thing.
I just don't understand how that this is going to kill the economy here in the U.S. And if you kill the economy in the U.S., don't you kill the economy in the rest of the world? I mean, you're in Canada, and when we get a cold, everybody gets the flu, right?
Absolutely, yeah. Well, I mean, it's not as though the economies, for example, in Europe are exactly, moving along here. I think we, get little bumps where it goes to, 1% and then other guys down 1%. And I don't think there's really anything going on. And when I look at the U.S. economy, I think the reason that the two areas of strength were housing and autos. Because, of course, you reduce the interest rates to zero interest rates and everyone's offering to, sell people cars with next to no interest payment and sell people houses with low mortgages. Well, those rates have gone up here. And the cost to buy a new home this time last year, it's up effectively by about 50%. So you have to know that housing is going to fade here, and it's already showing signs of doing that. And if they sort of have to charge you more on some of these subprime auto loans, and that is going to fall off too. I think we've created a situation where, yet again, we've pulled demand forward and added debt to everyone's balance sheet. And, it's just a recipe for failure in the long run.
A lot of people say that they're never going to taper. Some people say if they do taper, it won't be meaningful. Other people say if they do taper, the banks will pick up the slack. But at some point, doesn't the market make a decision for the government? They cannot do this in perpetuity. they cannot keep. I know this is Christmas week, and we are having a good Christmas because somebody was asking me on the radio, what do you think about this year? And I said, well, we're going to have a good Christmas. Other than that, I mean, 2014. What are your predictions for 2014 in the precious metals markets and I guess, consequently, in the stock market and the bond market?
Sure. Well, Greg, I might even go back and say, every year since '09, we go into the year and we think, we're going to have 3% growth. And by the time you get to the end of the year, you're down to about 1% growth. We'll probably be something like that this year as well. And, of course, everyone says 14 is going to be a good year. And I'm sitting there looking at Obamacare, I'm looking at rising interest rates, and I'm thinking, well, where are we all getting this growth that is non-existent when the 99%, as you well explained many, many times, is kind of tapped out here? So I don't see a strong recovery. In terms of precious metals, of course, I've been very distressed by what's happened in precious metals. As I've been distressed, by the way, to your main point, everyone thinks everything is copacetic. And I say, well, when are the people finally going to react to what's really going on here? That we're just creating a bigger bubble for ourselves. And when does the market finally wake up to it? And obviously the stock market isn't waking up to it, but we can certainly see something happening in the bond market. And I suggest, and perhaps others that you've interviewed have suggested, maybe the Fed is losing control of the bond market. And it looks like that to me, that we've had this rise from 140 beeps to 280 beeps. It's a very significant increase on just the talk of a taper. Heaven forbid that they actually tapered and rates went higher. And it will be the death knell, not just for the economy. How about for the government who has to pay those interest rates, and where interest then becomes a much more significant element of the total government expenditure. So in terms of precious metals, my big beef all along has been that the demand for metals is incredible, that the Chinese are there's some people think they're buying 100% of the Western world supply of gold. And I know I've had, huge discussions and disagreements, quite frankly, with the World Gold Council as to how they calculate demand. There's been an ongoing discussion with me and the council. When I see that, China imports probably over 1,000 tons more than they did 2 years ago in this a 4,000 ton market. How can the price of gold be going down when somebody came in about 25% of the market? And also in silver this year, we have the Indians coming in and buying an extra 16% of the market, just out of nowhere because they can't buy gold. And how can any market go down when you have a new entrant comes in and just says, well, I'll take 16% of that, and supposedly we're still supply and demand are in balance? I don't get it, okay? And I think ultimately the physical markets will win the day here, and we'll find out that certainly in the gold market, the central banks, in my mind, the Western central banks, have been involved in the sell side of the physical metals.
Do you think that the whole thing is manipulated? Some people say, oh, no, there's no manipulation. But people like Jim Sinclair he's basically going to head up the Singapore Gold Exchange, and there won't be any paper shorts. Oh, no. You have 50,000 ounces of silver? Great, bring it. We'd like to see it because we're going to trade it for you.
And the same thing with the Shanghai Gold Exchange. It's all physical settlement. And, it looks like they'll do well over 2,000 tons this year. Well, the Western non-China, non-Russia only produced about 2,100 tons a year. So China essentially is accounting for all of that. And I think my own view is that the central banks got together and said to India, you've got to stop your people from buying gold because there is no gold.
Oh, you think that they actually called them up and told the Central Bank of India, say, you got to do something. You think there is no gold to buy. You think they're afraid of a dam break in the price of gold.
Exactly, because, for example, Hong Kong imported 149 tons last month net, and India would normally buy 80 tons. Well, that would give you 230 tons. Well, we only mine 175 tons a month. And that's two countries. That's just two countries. We got another 178 countries to deal with here. And I think that the Western central banks are essentially out of gold. They were on fumes. They created this big sell down. They got people to liquidate the ETF, so they ended up with about 1,000 tons of supply they otherwise shouldn't have had. And then, of course, because of the tsunami of buying that the low prices created, they had to go to India and say, you've got to stop your people from buying gold. And every 2 weeks, we had a new rule in India. And I've heard that maybe it was as little as 7 tons in the month of November, and it would normally be about 80 tons. And that 80 tons, it would become obvious to everyone, okay, where's this gold coming from? There aren't many people that could supply an extra 80 tons a month to the gold market. I mean, there's probably, I could count on my two hands the number of people that own that much gold. So, and of course, they'd all be central banks. So I think there has been a manipulation going on, and I think it's going on because, as you and I know, and as your listeners know, the zero interest rate policy and printing of money is irresponsible. And because we know it, because we're just logical, I have no doubt that Mr. Bernanke knows it, Mr. Carney knows it, Mr. Draghi knows it, and Mr. Kuroda know it. And they got to keep their currencies to look like they're safe. And of course, one of the great ways of doing it is knocking the gold price down, because the gold price almost went down the most when Japan came in and said, oh, we're going to print another 65 billion a month. And then all of a sudden the price of gold goes down, which is so counterintuitive that you wonder, how could that have happened? And it's only one way that can happen in my mind, and that's central bank involvement.
And you're saying that the physical gold holders are going to win the day. Is there, and how do they win the day? Is there a point when the LBMA says, whoops, we don't have any gold, or the COMEX says, whoop, we no longer are going to deliver gold. We cannot or will not deliver gold. Isn't there, so you're saying that we're looking at a time, this thing is rolling down here. We're looking at a time where somebody's going to say we don't have it, or we're not going to sell it.
Well,
how close is that day?
It's interesting, Greg. Somebody, I think, said last November they didn't have it, and it was the U.S. government. When Germany said we want our 300 tons back, and it would have represented theoretically only 4% of the gold that theoretically the Treasury controlled. And I said, well, we'll give it to you over 7 years. Well, why would you have to give it to somebody over 7 years when it represents 3% of your inventory? I think that was the signal right there that the gold's not there. And ultimately, as you said, somebody will fail to deliver here. And it'll become apparent that, okay, we don't produce enough gold versus the world demand for gold.
Do you think that happens in 2014? I mean, is that the year you're thinking there's going to be a crash in this paper market?
I would have imagined, with the numbers that I see coming out of China, which just get bigger and bigger, and they're so large relative to the mine supply, that it should be happening right now. Maybe they can keep it controlled with derivatives or some darn thing, which of course I would have no sense of whatsoever. But the demand, like I've written an article suggesting demand might be 5,000 tons in a 2,000 ton market. So where's the gold coming from? And that's why I think the Western central banks are running on fumes right now. And that's why maybe they created this sell-off to get tons out of the ETFs.
Well, it's not working. I mean, it's working. It is working. They did get the price down.
It's working in that sense, and they got people to dispose of the shares of the ETFs. And of course, they liquidated it, right? They turned those shares into physical gold, which was delivered. So in other words, there was a delivery of 1,000 tons into the market this year from the ETFs that someone consumed. So that's not going to keep going on. There's probably only about 1,000 tons left in the ETFs. So fine, we maybe have, one more year of that, there'll be nothing in the ETFs. And then, of course, we'll find out that the demand was way above supply, which I've always postulated.
But here's come on, these guys aren't stupid. They know what you know. I mean, the guys behind the scenes at central banks, they certainly know what I know.
Yeah.
And I'm thinking to myself, who would sell their last ounce of gold or their last ounce of silver and have nothing? They're going to come to a point, that's why I say they cannot or will not. There's going to be a will not before they cannot. I think they're going to come to a point where that's it. That's ours. We're keeping this. We know this is going to skyrocket.
Yeah. Well, there's always a point where you finally look in the cupboard and you say, okay, I've lost this game. Okay. Like I've been selling it. It's not working. And you might just say, pack it in. But in doing that, Greg, what is the message? If you finally gave up and said, oh, by the way, all that gold we said we had, we don't own. What happens to the bond markets and the stock markets when you have to admit that it's been a fraud the whole time? That's why I think they'll probably go down till the last bar is gone, or try to find some other way of getting another bar, however they do it. Or maybe they'll even, ban people from buying gold, or maybe they can't get the Chinese to stop buying, but they might, the mint, for example, the U.S. mint would stop selling coins, something like that.
Well,
maybe lets them last a little longer.
The day they tell the mint to stop selling eagles and buffaloes, and I mean, isn't that the big red, skyrocket,
Yeah.
torch that goes up in the air and says it's over.
Yeah, but the Mint, in a little way, does that already, right? Even this year, they've announced, I think it was as of December 8th, that they would stop selling silver coins this year. And they're going to stop selling for, I think, something like 31 or 33 days. I think because they don't have the coins is the simple reason. Why wouldn't you keep selling them? All of a sudden they said, well, we're not going to sell them for a while.
That's right.
As you know, the demand for silver coins at the U.S. Mint was a record high. Record high. And it just blows my mind that we see these huge demands out of India, huge demand at the Mint, and the price of silver goes down. I mean, it's so counterintuitive. I'm frustrated even talking about it.
Well, that's kind of like a guy with a taco stand selling tons of tacos, and all of a sudden he says, "Hey, I'm selling so many, I'm going to stop selling them."
Exactly.
I mean, what?
Yeah.
So,
Yeah.
what's your price target for gold and silvers? I mean, do you think it's going to go much higher in 2014?
Well, Greg, I'm very aggressive targets here. I mean, I think they'll both hit new highs. Okay. So I think gold easily goes through 2000. I mean, I'm just looking at supply and demand, and it's screaming at me that someday this is all going to become apparent to people. I mean, I'm glad that, the views I have are shared by the guys who figured it out back in the last decade when the market was overvalued and the government was in trouble and all these things were going to happen, which most of the people you talk to all predicted. And to a man, they kind of are, believe in the Ponzi and something's going to break. And I believe that too. So I think the price of gold goes north of 2000. I'm certain the price of silver will quickly go over $50. And then when it does, I think it'll get a little crazy.
You think this is your 2014 prediction?
Absolutely. Yeah. Yeah.
And what about the rest of the economy? If the economy implodes, do you think the economy has a hard time in 2014 with the extra weight of Obamacare and people's premiums, doubling, tripling, up 50%, up 100%, up 300%? I've heard all kinds of stories on my site that most people are paying more.
Yeah. Well, I would suggest that's going to have a serious economic impact to the negative, of course. And in a weak economic environment, it puts stress back on the banking system. I mean, we never solved the problem from '08. Okay, we fed more money into the banking system, but the banking system is just massively over leveraged still. And I was looking at one of the major European banks just yesterday. I was in a meeting. I was just trying to explain to the guy the risk of banks. So, well, bring me in a statement from this big bank in Germany. And I looked at it, and they were levered 37-1. So if you lose 3% on your assets, you have no capital. Well, 3%. I mean, look what currencies fluctuate by. The bonds are down 11 or 12% this year. Foreign currencies are flipping all over the place. The stock market's moving around. So if you have a weak economy, it puts more stress on the banking system. And of course, my big argument with gold is you have to own gold because you don't want to have your money in the bank. You don't want to get bailed in. And I think that's something that people should take a lot of consideration of. The fact that we keep introducing this legislation to bail, the banks in, should there be a problem. And there's a reason they're introducing that legislation, because if the guys in power know it's a bit of a Ponzi scheme, they know that the day of reckoning is coming and they're setting up for it. And that's why I think, they're in such a hurry to get this banking resolution in Europe, and there's legislation in the U.S., legislation in Canada and the U.K., various countries, that this is going to happen.
Do you think that the odds on handicap a bail-in for us in 2014? You think a bail-in comes in 2014?
I'm absolutely convinced there will be sovereign banking systems that fail in 2014. And the most likely candidates are, the European, Southern European countries, or some country that's a smaller, it could be, I don't want to pick on any particular country, but there's some come to mind that they've already announced that their bank's got to raise, I think it was, for example, Slovenia said our bank's got to raise $4.9 billion. Well, if they can't raise the $4.9 billion, what happens to the banks? And, we've seen situations where, for example, Poland took back the bonds that the pension funds owned over there and said, well, those bonds you own, you don't own them anymore. We're just canceling them. Russia did the same thing with some of their pension funds. They took the Russian bonds back. So you can see this creeping seizure of assets and trying to put the problem onto the citizens of the country, because obviously the countries can't deal with those issues. The banking issues are bigger than the countries, unfortunately. So the countries have figured out, I got to leave it to the bank, and the bank means the creditors means the depositors. So I'm absolutely convinced we will see probably more than one event of it in this coming year.
2014. Eric Sprott, Sprott Asset Management. Thanks for coming on during Christmas week and dropping a nice, Christmas story on us. And the truth is a nice Christmas story. The truth, which you don't hear on mainstream media. One last thing, Kolikoff told me that, you're writing an article, written an article on the Inform Act. And this is probably not in your article, but he told me, and I found this outrageous, that they took a full-page ad out in the New York Times. I mean, mind you, this is 15 Nobel Prize-winning economists. This is 1,000 other top-line economists, all the big schools, Stanford, Harvard, Yale, Michigan, Missouri, Texas. I mean, everybody, all the Ivy, Harvard, everybody is represented in some way, shape, or form. And the mainstream media just did this. Take out a full-page ad on the Inform Act, and it got a big pass. That's why people in this country don't realize what's going on.
Yeah, I mean, I'm in this article I'm writing. It's so ironic, right? It's called the Inform Act, but nobody will inform you about it, and yet it's been introduced into Congress. And I checked with Google to see if I could see anyone discussing it, because it's the elephant in the room, as we discussed earlier. No one wants to talk about it because we don't want anyone to have to realize exactly the precarious position we're in. And by the way, it was a great interview. I really enjoyed watching that interview with Kolikoff.
Thank you so much. I appreciate it. Thank you for coming on during the Christmas week. Eric Sprott, Sprott Asset Management. Thank you for joining us today on USA Watchdog.
Okay, Greg, my pleasure and all the best, and have a great Christmas.